Stocks swing from green to red as mixed earnings and global cues muddy the outlook for the market. Realty and FMCG lead the gains, while metals, consumer durables as well as healthcare drag today.
Hindalco slips after its arm Novelis reports a big hit on profitability due to high costs, but Coal India parks up on a hefty dividend despite an earnings miss.
MRF slides on sharply lower margins. Dr. Lal's and Metropolis slip on fears of rising competition, while Jubilant Foodworks sulks as non-pizza business disappoints. But PI Industries rallies as new brands kick up the growth for the company.
Paytm owner 197 Communications' EBITDA loss contract sparking hope of a turnaround, while lower loss and a visible path to profitability drives up Policy Bazaar owner PB Fintech.
Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. Pavitra, good afternoon. So markets started on a good note in the morning, but has found it difficult to really hold on to the positions that it really began on, but nothing to really talk about when it comes to the tentativeness as well as the flatline approach that the market is taking at the moment. So Nifty 50 on the flatline at the moment, 18,189. One can take consolation from the fact that it's holding way above the 18,000 mark, and that particular level seems to be conquered and being comfortable. But when it comes to Bank Nifty, which hit an all-time record high today, is surviving in the green in an otherwise tepid-looking market today. There's no sense of nervousness. They're 0.27% higher in trade at the moment. Mid-cap universe also looking flat but with a red tinge. But advance decline ratio in favor of the advances, with a lot of financials as well as the mid-cap universe not giving a hit on the market, and with Sensex and Nifty being on the flat line. Adani Ports has been one stock in focus, almost 5% up in trade at the moment. Coal India doing very well. ITC, Adani Enterprises also are some of the top gainers at the moment in the markets. Pavitra.
Hi Nisha, good afternoon. So like you said, there's definitely been quite a slip from the day's high, around 100 points gone. But where there's no slip at all is the PSU Bank Index. That just continues to charge high. It's around 3.3% in the green as we speak. So a lot of those banks, are just doing well. If you take a look at, for the week, the index is up almost 8%. These are a few of the banks that are doing very well. So do keep your eye out on this space. That is something that we're tracking. A few of the FMCG names, the likes of Britannia, also holding up well. On the downside, it is a lot of the pharma companies, the larger names, which are seeing some cuts. But remember, the key cue now will move to what's going to come through as far as the US CPI print goes. That is on Thursday, and that is what the markets will really be tracking. That's the market action, but we're going to come back to this. First up, let's talk about some individual stocks which are in focus. Hindalco corrects. It is the top loser on the Nifty, down over 4% as its subsidiary Novelis' second quarter numbers disappoint the street. The subsidiary has also lowered its guidance on the capex and realization. So Nigel is here to fill us in with more details. Nigel.
Well, Novelis' numbers were more or less in line. If you're looking at the absolute EBITDA or the EBITDA per ton, EBITDA per ton are around $515 per ton, well, that's par for the course. The problem is that the near-term outlook could be muddled, because the management on the con call, they said that there are some cost headwinds which could pull back the EBITDA by around $75 to around $100 on a per ton basis. So basically now the street is staring at an EBITDA per ton number of around $420 to around $450 per ton. The longer term, though, they are maintaining that trajectory of around $525 per ton, because they say those, the costs will get adjusted accordingly, and that's why 2 quarters down the line, profitability will be back. The other factors that did come out in the numbers were capex was pulled back. Remember, earlier they were guiding for around $1.3 to $1.6 billion. Well, that's got pulled back to sub $1 billion, but some part of the street was already anticipating that. The net debt number continues to remain a little bit elevated. There was no reduction even on a sequential basis. However, in the second half of the year, the management is stating that the working capital will get released, which amounted to around $600 million. So that will be a bit of a relief, and that's why they are guiding for free cash flows of close to around $500 million for FY23. So they're expecting a big recovery in terms of cash flows. Back to you.
All right, Nigel, thanks for all that update on Hindalco, but it's a tale of two cities between two metal and mining companies. Let's talk about Coal India, which is having a good day in trade, over 3% up in trade, but this is after performance which was, lower than the street estimates on all counts, sales, EBITDA, as well as profits for the second quarter for this particular company. So below estimates numbers, but it seems that the announcement of an interim dividend is really boosting the stock. Nigel, take us through the prospects of this company, the performance analysis, as well as the stock movement.
Well, that's right. For Coal India, it seems the street has taken note of that hefty dividend and brushed aside the numbers, which were a little lower than what, most on the street expected. So on the top line, there was a small miss. The EBITDA number as well, a bit of a miss out there. And the profit number as well did miss estimates. And the key reason was the blended realization came in sub 1,800 rupees per ton, came at around 1,781 rupees per ton. Remember, most on the street were anticipating a number of around 1,850 to around 1,900 rupees per ton. So that was a bit of a miss. The key reason out there is the e-auction volumes. Well, that contributed less than 7% of their total sales. Remember, in the past, it contributed around 11, 12, 15%. Also, lower contribution coming in from the e-auction segment, which is the profitable part of their business, and realizations out there had spiked up big time. The other factor that played out was costs are higher. Employee cost was higher on a year-on-year as well as on a sequential basis. So we need to wait by for management clarity as to how much of it was provisions for further wage rate, future wage hikes. That's going to be important. Besides that, you also had the stripping activity, which is a non-cash expenditure. That as well did spike up out there. However, though the numbers were weak, the dividend of around 15 rupees, that's something clearly that the street liked, explains why the stock is doing well.
All right, Nigel, thanks a lot for taking us through the details on both Coal India as well as Hindalco. But with that, let's move on and talk about MRF, which is trading with deep cuts. It's down almost 7% now after the margin significantly contracted in the second quarter. So Sonia is here to take us through all the details on MRF. Sonia.
Well, thanks a lot for that. Yes, MRF is under quite a bit of pressure today on the back of a weakness that the company has seen in its margin performance this time around because of higher raw material costs. Now, it's interesting that MRF is down 6% while CEAT is up about 1.5%. That's because while MRF has seen a contraction of gross margins, CEAT has seen an improvement. Perhaps that's because MRF has not been able to pass on all the raw material costs to the consumers. If you look at the Q2 margins, they have fallen 230 basis points year on year, coming in at just 8.2%. And if you compare it to the last 5 quarters for MRF, it would trade in a margin band of 10 to 11%, and that has fallen substantially in the last 2 quarters. Hence, the question is, when will MRF return to double-digit margins? And that's something the street is concerned about. On the top line, no problems at all. A revenue growth in excess of 18% because of a good improvement in the auto OEM demand. There's a pickup in semiconductor availability, because of which production has picked up across OEMs as well. But it's the margin pressure which is dragging down the stock today.
All right. Thanks so much, Sonia, for getting us those details. Flashing on your screens right now, over 7% up on Dhanlakshmi Bank. And take a look at the net profit figures. It's 16 crores, a substantial rise on a year-on-year basis for this particular company. Almost 7% up. And as the numbers trickle in, the market is trying to digest those numbers and stock is adjusting to that. So we'll wait for that. But let's talk about some of the other results and companies' performance. In fact, Dr. Lal PathLabs is under pressure after the margin for the company contracts and the brokerages give a cautious outlook on this particular counter. Earlier today, we got in touch with the management of this company, the CEO at Dr. Lal PathLabs, to understand how the company would really fare going forward and what lies ahead. Listen in.
We do believe that, pre-COVID margin levels of 25-26%, normalized EBITDA margins are what we are really, keen to achieve in spite of all the pressures which come into the business. So that is something which we are constantly working towards, on a longer term basis. And that is what we feel comfortable with. We have been tracking competitive pricing, and what we understand is that a lot of them were introductory or promotion prices, which are now slowly being withdrawn or moved upwards. We have seen evidence that the package prices or the one-off test prices, which were at deep discount, are slowly being inched up to what we believe will be sustainable pricing for all the players. This industry has a very high gross margin contribution the way we look at it, but also a very heavy, what I would call fixed cost structure. So it is not really possible to keep offering very, very low prices without fundamentally altering the value chain of this business. In the absence of any value chain, all the promotional pricing will obviously move out over a period of time, and which is what we really are witnessing at this point of time.
All right, that is the management of Dr. Lal. They're saying that they can maintain margins at 25 to 26%. By the way, Ramco Cement's numbers are on your screen. So the revenue has come in a little bit above what the street was estimating. So it is at around 1,783 crores. But the profit is sharply lower this time. So it's 11.5 crores versus the poll of 50 crores. So that is where you're seeing quite a miss. The EBITDA also at 182. So that one has come in significantly below what the street was expecting. Remember, this time, of course, across the board for cement, it's not been a good showing. So not really much of a surprise, but definitely below what the street was also estimating in terms of...
Yes, so there is something that the street was factoring in, which the company has not performed on, and it's on the operational front, because the EBITDA and EBITDA margin figures are the ones which are below the estimates, while the revenues are higher. Stock is down 1%. We'll have to see if there is one-time item there, Pavitra, so we'll wait and watch out for that.
All right, the stock around 1% lower. It has taken a knock after the results did come through. The other one we're tracking is Jubilant Food. This one is also seeing sharp cuts. It's down around 6% despite what was quite an inline set of second quarter numbers. So Mangalam is here with the fine print. And Mangalam, also tell us what a brokerage is making of the performance.
Well, as far as this quarter's numbers are concerned, they were largely in line. However, the street is looking at what took place over the last 3 years and what is likely to take place over the next 1 year. And perhaps as a result of which we are seeing that cut on the stock price in today's trading session. As far as the second quarter is concerned, the revenues at around 1285 crores, largely in line with the street expectations. Also the net profit, rather EBITDA at 312 crores. And it was expected that the margins will contract because we have seen inflation in both cheese as well as vegetable prices. And going forward, wheat prices are also on the boil. The net profit, however, was impacted by higher depreciation, which is a non-cash expense, and higher effective tax rate as well. The Domino's like-for-like growth this time around has been 8.4%, and this compares with street expectations of 6 to 8%. And they've added 76 new stores this quarter. Again, here the street was working with a number of around 50 to 60 odd stores, and the management has guided for 250 stores to be added in this year itself. However, it's the non-Domino's business which has the street worried, because while they're looking to open 20 to 30 new Popeye restaurants in the country, the other verticals that they had generated, the kinds of Hong's Kitchen as well as Ekdam Biryani, they have put that on a bit of a pause mode. They're looking at the unit economics before taking a fresh call on expansion out there, and that is where brokerages are worried about. If you take a look at it over the last 3 years, ICICI Securities says that the revenues per store have actually been stagnant, and at the same time, execution in the new brands has utilized management bandwidth with subpar outcome. While they remain constructive on the stock, they've trimmed their target price from 750 to 720 rupees. Jeffries as well says over the last 3 years, the revenue CAGR has been a moderate 9%, and the entire benefit of price hikes that the company has taken have not flown through, primarily because consumers are now down trading. As a result of which, they too have trimmed their EPS estimates by 3 to 4%, but they remain holders on the stock with the target price unchanged at 580 rupees.
All right. Thanks so much, Mangalam, for getting us all those important details. And stock to be watched out for after the results announcement is Ramco Cement, and that stock is down 1.5%. It is disappointing on the street estimates, and the net profit figures are also substantially lower on a YOY basis, and on operational front, EBITDA as well as EBITDA margins also substantial downtick there. So we will get you more analysis on that and more results as well as news updates on the other side. But we'll take a quick break on Business Lunch. Stay tuned.
Welcome back. You're still tuned into Business Lunch. Now, here's an interesting story for you. With the states headed for polls, CNBC-TV18 has hit the streets in Himachal Pradesh to understand the key issues that could play out in this election. So in December 2003, the NDA government abolished the old pension scheme, replacing it with the national pension scheme in April of 2004. Now, this has not gone down well with the people of Himachal Pradesh, especially retired government employees. So CNBC-TV18's Sandhya Gora reports that demands to restore the OPS have picked up steam in the run-up to the state elections, and the Congress has made this one of their cornerstones of the campaign. So let's take a look at that.
This is 62-year-old Haridas's tea and Maggie stall in Kufri, one he started soon after retiring as a peon at Theok's Government Boys Senior Secondary School, where he worked for 24 years. But this wasn't his original retirement plan.
हम घर में आराम करेंगे जी, बस यही सोचा था हमने.
He blames his return to a hard life on the central government's decision to abolish the old pension scheme and replace it with the national pension scheme. His last drawn salary was 25,000 rupees a month, and under the old pension scheme, he would have received half of that as pension, around 12,500 rupees a month. Under the NPS, state government employees contribute 10% of their salary to their pension fund. The state contributes an equivalent amount. This money is then invested in earmarked investment schemes, and the returns on this will determine the pension payable.
ये इसलिए नहीं हो पाया जी, जब हम रिटायर हुए तो मेरे को 1301 रुपये पेंशन मिल रही है, तो इसलिए अब गुजारा नहीं हो रहा है, ना चाय पीने को मिलती है, ना खाना खाने को मिलता है, तो 1300 रुपये से ना सिलेंडर भरता है, एक पौच तेल खाता है. अब कैसे होगा मैम जी?
Haridas is not an isolated example.
There are at least 3 lakh government employees like Haridas in Himachal Pradesh who are demanding the restoration of old pension scheme. And considering their strength, they have the power to impact the election results by a huge margin. And these government employees, whether they are retired or currently serving, they are clear on one thing, that only those who will restore the old pension scheme for them is going to get their votes.
तो कांग्रेस सरकार बोल रही है कि हम जो है क्या नाम ओपीएस आपको जो है वो जिसी वक्त सत्ता में आएंगे उसी वक्त पहली कैबिनेट में आपका जो है वो ओपीएस बहाल करेंगे, ये आश्वासन दिया है. तो इसलिए हम सोचते हैं कि हम अपना वोट जो है वो कांग्रेस को ही दें.
For the ruling BJP, this is a catch-22 situation. The old pension scheme was abolished by the NDA government in 2003, and bringing it back in the state will prove awkward. But with elections drawing closer, the state leadership is taking the issue seriously.
यानी कि उम्मीद है कि ओपीएस वापस आ सकती है हिमाचल.
मैं ये कह रहा हूँ कि ओपीएस आए, चाहे ओपीएस का इसका कोई एक सॉल्यूशन कोई निकले, कोई रास्ता निकल आए, और वो निकलेगा तभी जब केंद्र सरकार इसमें आगे बढ़ करके मदद करेगी, और केंद्र में भाजपा की सरकार है.
The Congress has already bitten the bullet.
The biggest issue that the day Congress party is sworn into power, the first decision by the cabinet of the Congress government will be the restoration of OPS.
A restoration of the OPS will come with added cost for the state government. Experts estimate that it could result in a one-time expense of around 2,000 crore rupees and work out to a yearly recurring expenditure of over 700 crore rupees. And with government employees making up over 5% of the state's electorate, this demand cannot be swept under the carpet. In Himachal Pradesh, Santiagora.
All right, very interesting story then on the plight of the people. With that, we'll slip into a short breather. Keep an eye out on Ramco Cement. That stock is down over 2.85% at the moment. We'll come back with more news and updates right on the other side. Stay tuned. Welcome back. You're watching Business Lunch. Now, the Indian rupee has hit a 6-week high on the back of good inflows as well as global dollar weakness. Lata is right here to take us through the action on the rupee front and the levels that are estimated going forward as well. Lata.
Well, this is a pan-Asian phenomenon. The dollar's weakness has led to a very good rally across Asia, and it looks like now this trade is set for a bit, according to dealers, because people had gone too long on the dollar, and now after the non-farm payroll numbers, the general feeling is that the hikes of the Fed are in the price and there is no need to drive the dollar up further. Of course, the CPI numbers may change the trend, but at the moment, the rupee is just following Asian currencies. It's the second best performing currency. The won is even stronger than the rupee today in terms of the gains made. The rupee has 2 other positives in its favor. India is perhaps the only country which has been consistently receiving FII inflows. So that also means more dollar selling and positive for the rupee as well. Crude. Nobody is as big an importer of crude as India is. And the fact that it's fallen to below $95 per barrel, the Brent crude that is working in sentiment-wise in favor of the rupee. There has been a lot of dollar buying by importers, but the strength in favor of EM currencies is so strong that dollar longs are being cut left, right and center. So it looks like the rupee has more legs to run ahead.
All right, Lata, thanks a lot for that. So 81.41 on the rupee. But let's now shift focus to the other end and talk about the crypto space, because there's a lot going on there as well. Manisha is here to fill us in on what has been a lot of dramatic events coming through from there. So Manisha?
Well, yes, a lot of drama and much of that clearly happening on Twitter yet again. But, it's a third straight day of selling that we've seen in case of cryptocurrencies. And this clearly is a contagion effect. If you look at the Bitcoin, it's trading at the lowest since November 2020. It's sad, really, because the last couple of months was some consolidation. The month of October actually saw some gains coming in for many of these cryptocurrencies. November clearly seems to be clearing all that off. So much so that we saw the Bitcoin decline to 17,200 on the lower side as well. The sell-off also has been seen in case of altcoins, Ethereum, and some of those stable coins as well. Well, the backstory really is about Binance, which is the largest cryptocurrency exchange by volume, buying its rival FTX in an attempt to really hold the cryptocurrency there, or as a bailout attempt, if you can see. We have seen a kind of sell-off that we've seen in FTX's native currency, which is FTT, and this is after CZ, or as Zhao is called, the owner of Binance, saying that it is going to sell off the illiquid tokens that are on the balance sheet of FTX, and also its company Alameda Research. So within these tokens, you have Solana, which has seen a sell-off as well, and FTT has declined almost nearly about 70% in last 3 or 4 trading sessions itself. When you look at the holders of this cryptocurrencies, the customers also have been struggling actually to get the money out of FTX. We have seen a sell-off or a liquidation of nearly $6 billion within FTX in last 3 trading sessions itself. There is money, of course, coming in for Binance. If you look at the inflow, that has been at 110 million of the stable coins. The current balance clearly stands at around $26.7 billion there. The sell-off, the market tells us, is not perhaps done even as of now. The next 3 or 4 sessions could see some more selling coming in for many of these cryptocurrencies. So whether it's about Bitcoin, Ethereum, Solana, FTT, there's a huge sell-off happening in the European markets even as we speak.
All right, Manisha, thanks for adding so much color to the crypto side of the business. All right, on to some important national development of the day. Well, Justice D.Y. Chandrachud has been sworn in as the 50th Chief Justice of the country. Now, President Draupadi Murmu administered this oath of his office at Rashtrapati Bhavan today, and he will be serving as a CJI for a period of 2 years. Now, remember that Justice Chandrachud takes over as the head of India's judiciary from Justice U.U. Lalit, who demitted the office on Tuesday. Now, Justice Chandrachud was elevated to the top court on May 13, 2016, and has been part of several constitutional benches and landmark verdicts, including on matters related to the Ayodhya land dispute and the right to privacy. So some of those big rulings and judgments added, feather to the new CJI of the country. So that's a big news, Pavitra, but, the whole country is also watching out for the, T20 World Cup. And even though today India is not playing, it's a very important match where Pakistan is in the semi-finals, and whether it will be knocked out for the finals or not.
Let's see if we get that exciting weekend or not.
Yes.
We can only hope for now. But on that note, we're going to wind down on this edition of Business Lunch. The market is around 25 points in the red, pretty much at the low point of the day. So thanks a lot for tuning in. Mid-Cap Radar is up next.